G'day legends and welcome back to another video. Bitcoin is showing considerable weakness across the macro charts, the weekly charts, and even the immediate short-term price action. In today's video, we are doing a comprehensive macro and short-term analysis discussing exactly what you should be paying attention to, the key indicators we are watching, the warning signs that are popping up, and exactly what we expect to happen next for Bitcoin across the macro and the short term. We'll also be discussing the 4-year cycle potential bear market and exact bottom prices projected from the historical data of the 1064-day bar theory, and finishing up on the total cryptocurrency and altcoin market. We have so much to be discussing today. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining the VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin, checking out our links to our trading track record, or watching a 10-minute video showing you inside the channel. Go ahead and check it out. Let's jump on in. So, taking a look at Bitcoin today, we are going to be discussing the weekly chart in reference to our Gaussian channel, our bull market support band, the deviation from the range high, and the weekly breakdown of the RSI. We'll be taking a look at the short term, discussing the 3-day breakdown of the 50 EMA, a major event of significance, and of course going over the immediate price action. What is happening with Bitcoin? Are we going to continue to see this weakness develop and corrections into this $100,000 to $98,000 region, or will the buyers step back in? We'll be discussing exactly what levels the buyers will need to break through to facilitate proper sustained reversals, or if they fail to, what is likely to occur. And of course, discussing the 4-year cycle targets and the total cryptocurrency market cap. Let's start on our market data. 24-hour volume down 32%, 320 billion. Liquidations down 42%, 430 million over here. Taking a look at liquidations, a little bit of a majority over here coming from long position, as Bitcoin did drop back down. So if we take a look at the immediate short-term price action here on a 15-minute chart, we can see Bitcoin had that initial correction back into those lows, something that we projected to occur in our prior video. We expected a correction back into these lows at around 111,000. We then saw a little bit of a bounce back into our prior change of character. Again, prior support becomes future resistance. From there, we actually ended up taking a little bit of a short for Bitcoin. You can see the short was posted here, and we expected a bit of a correction back into this $111,000 region, which we saw play out pretty much absolutely perfectly. With that, Bitcoin is still showing weakness, and we are still actually pushing down, getting very close to this low historical resistance range of this gap on the VRPV, suggesting that if we do drop below this 109, 110 level, we are literally going to be jumping off a cliff in terms of volatility and bearish momentum. This means we could see significant corrections for Bitcoin very, very quickly. Something to pay attention to. We'll discuss that in today's video. And that is why we said in today's video at the start, we are kind of seeing a lot of warning signs pop up for Bitcoin again over here, and we'll discuss that very shortly. Let's start on the DXY. Taking a look at the DXY here. Not too much happening, watching very closely interest rates, watching inflation data. These are going to be the main mechanisms that really drive the perception of risk in the market at any given time. Of course, the Federal Reserve made it very clear that they want to drop interest rates to stimulate the job market, but they don't want to do it so much that inflation begins to rise. That is, of course, going to play a massive role in determining whether or not we see this continued drop in interest rates facilitating risk asset growth, or we see the Federal Reserve backpedal a little bit, take a more of a pessimistic approach, and we see the market correct. So that is going to be more of a play it by ear scenario. As for the trade wars. There are some announcements of more trade wars going on with China, more tariffs. We're kind of getting one day there's going to be no tariffs, the next day we're getting more tariffs. We're flip-flopping, not really any clear assessment of what is happening. And this uncertainty really does drive some downward price action in the market. So a lot of uncertainty around the future economic situation in regards to interest rates and even the trade wars or tariffs. So we do have to play all of this by ear. With this, we are just seeing some more stagnant sideways price action for the DXY. Looking at the S&P 500, again, not too much happening here. We saw that flash correction for the broader markets. The most logical assumption here is this was the local top. We are expecting corrections lower, provided we do not break above this level. If we break through this level again, that will be a very clear sign we are pushing into that 7,000 resistance. So very simply, bearish below, bullish above. Below, we expect corrections potential as low as 6,250 to 6,300. If we break through here immediately, we're going to very likely see some strong rallies into 7,000 as a bullish target. Again, how that plays out will be very much as a result of what happens with interest rates, and especially what happens with these quote-unquote trade wars or tariffs that have been developed. Pay attention to that. With that being said, guys, let's jump into Bitcoin. Before we do, go ahead and sign up to BitGet, BitUnix, or BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15% of all your trading fees. You'll go to support me making this content on a daily basis. You'll trade where all of my members, and of course, I trade on a daily basis. And of course, we'll be using exchanges I trust. So check it out, we'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get into it. I want to start on the higher time frame charts today, then build it into the short term, and then finish up with the altcoin market and the total cryptocurrency market cap. So very quickly, the 4-year cycle, guys. A lot of people are thinking we're going to see continuations higher. A lot of people think this is the top, the 4-year cycle, etc., etc. The 4-year cycle, 1064-day bar theory, is a theory we've been discussing on this channel essentially since these lows at around 2023. And more recently, again, as we've approached these potential tops in around October 2025. Of course, as we know, according to the 1064-day bar theory, according to our mathematics over here, the 1064-day bar theory suggests there is 1064 days on average between absolute bottoms to absolute tops for the 4-year cycle, and then we enter around about a 365-day correction, which would commonly be referred to as the 4-year cycle bear market, okay? Now, according to the 1064-day bar theory, there is around about a 30% probability that the 4-year cycle, or the 1064-day bar theory, breaks this time around. Now, for us to be confident that the 4-year cycle has broken, we would need to see a top occur for Bitcoin after the 29th of October 2025. If we create a top after the 29th of October 2025, that top would occur at least 2 standard deviation ranges outside what is projected by the 1064-day bar theory based on the prior 4 cycles, indicating to us that it is likely the pattern has finally broken. Now, assuming the pattern does not break and this was the top, where could Bitcoin potentially bottom / where could Bitcoin potentially go to if we enter another traditional 4-year cycle bear market? To answer this very simply, We are not going to be looking at drawdown percentages. The reason we are not looking at drawdown percentages is because the market capitalization increases over time, and therefore the amount of money that needs to leave to match 86% pullbacks becomes significantly greater and greater. We do not see a linear drop in the market. When we have this, we see more of a diminishing return effect where the percentage decreases become smaller and the percentage increases also become smaller. And therefore, although we saw an 86% pullback here, a 84% pullback here, and a 76% pullback here, that doesn't necessarily mean we are going to see a similar pullback in terms of percentage. What we are looking at instead is we are looking at where the price action would likely find equilibrium, where it would suggest mean reversion has fully occurred, if not pushed into more of a oversold territory in terms of mean reversion, then more of a balanced position. In terms of that, we can use things like the 50 EMA, we can use things like the Gaussian channel on the weekly to project where that would likely be. According to the 1064 day bar theory, a bottom would take place around about the 5th of October 2026, and the price range for Bitcoin around then, assuming these this pullback occurs, this bear market occurs, we could likely see a logical top, a bottom, should I say, between 52,000 and worst case 36,000. That would be the range for a potential bottom. We're not going to go over that anymore. That is it. There's nothing really more to say. Of course, if Bitcoin creates a top past the 29th of October, this theory is invalid. These targets maybe become redundant. This is solely based on if this pattern plays out, where could Bitcoin go? And that is the answer if this pattern plays out. 36 to 52,000, the 5th of October 2026. Let's jump over to the total cryptocurrency market cap and altcoin market cap, and then we'll get into Bitcoin. So let's start on the altcoin market. The altcoin market is looking very grim. It is dropping below that $1 trillion level. Again, we've been talking about this for a while. Everyone was yelling altcoin season, altcoin season. We literally made a video on our second channel discussing why we won't see a traditional altcoin season like we saw in the past. And the simple answer to that is we have a massive supply, oversupply issue. This time around, this cycle, we're seeing millions of altcoins being created a day. In the prior cycles, we only had a few thousand altcoins in total. There is much more places for money to go to, and that spreads the money across significantly more pools, and therefore each individual altcoin performs significantly worse, even though the altcoin market cap is rising. In terms of the altcoin market, to keep it very simple, this is our 2021 top, this is our 2024 top, this is our 2025 top. We need to see a breakthrough as level for the altcoin market to take the next leg up. If we do not do that, we are bearish in the altcoin market. The reason being is, again, we have downtrending momentum. We did not break through. We have a positive momentum shift. We have a weakening positive momentum shift developing here on the weekly chart, and the price action is breaking back below 1 trillion after rejecting from these highs. We were bearish at these highs. We are still bearish in the altcoin market in terms of Bitcoin dominance. Bitcoin has more or less reached our target as expected. We were looking for a move into around that 56 to 57% Bitcoin dominance range. We are now converging between the 250 EMA, a perfect place for Bitcoin dominance to begin to start chopping. We might see one more push down, but it's more likely we begin to chop before we then push back upwards. So the altcoin market is looking very risky, and unless we see some more certainty around future interest rate reductions and more certainty around tariffs, it is unlikely that the more speculative assets in this asset class will perform well. It is only when we see more euphoric price action, more euphoric conditions, we see the more speculative assets such as altcoins begin to exceed performance of Bitcoin. So something to pay attention to. In terms of the total cryptocurrency market cap, it is still looking okay. It's looking bad, but it's looking okay. The bad things is, number one, we had a deviation range high set up on the weekly. This is a very clear reversal. This is a reversal sign. We have got that with bearish momentum. So of course we have a negative, we have downtrending momentum. Overall, as we can see with this trend line, I draw it in terribly. We have downtrending momentum in that trend line, but we've also got a bearish divergence here with this recent rally, telling ourselves overextension. The buyers were unable to maintain strength into that push. We've seen a correction, and we are watching very closely this $3.65 trillion level. Now, we mentioned at the start of the video, Bitcoin essentially is on the edge of the cliff at around 110. And this is no coincidence, as the total cryptocurrency market cap is also approaching a significant point of support, which is this 3.65 trillion level. If Bitcoin breaks below 110, we will as well see the total cryptocurrency market cap break below 3.65, and we will likely see market-wide corrections that could bring the entire cryptocurrency market down. Pay attention to that. This is the line in the sand. This is our last point of support. Let's move over to Bitcoin, starting on the weekly chart. So the weekly chart is looking pretty grim, like we've said. We've seen the breakdown of the symmetrical triangle formation of the 1 year long RSI pattern. This is a symmetrical triangle suggesting that momentum has flipped negative. We're seeing a negative momentum shift here, and we're seeing a breakdown in the RSI. This is generally leading for the price action to continue downwards. This is a pretty bad sign overall. It's suggesting there is high time frame weakness here that has been developing to the point of which the momentum is officially in the control of the sellers for the first time in 2025. Essentially, okay? If we're looking at the bull market support band, we are sitting within the bull market support band on the weekly, so we are going to be watching that for the weekly candle close. If we close below the bull market support band, what we've seen in the past is we've seen corrections into that 50 EMA. So we'll be watching for steeper corrections, potentially into that $100,000 region again, if this weekly candle is unable to recover. And of course, for this weekly candle to get to a point where it would be unable to recover, we would likely have to lose 110,000, entering that low historical resistance range we discussed briefly at the start of the video, and we'll discuss in just a moment. So you're going to see how things are lining up. It is not looking fantastic. Now, if we're talking about a traditional bear market, at what point would the macro trend be officially showing major weakness? And of course, this is a lagging sign, right? It would be the loss of the 50 EMA and the loss of the Gaussian channel upper band. Historically, when we lose the Gaussian channel upper band, we move into the mid-level, which is around 90,000. If we lose the mid-level, we generally move towards the 200 moving average, which is that $70,000 region. So if you want to be completely confident that Bitcoin is going to go lower and not just betting on this weakness developing to a higher time frame reversal, which although is likely, is still again not confirmed, you're watching for the breakdown of the Gaussian channel upper band. That's really going to be the key point, because if we look at the bull market, guys, ever since 32,000, the bull market started. This is when ETFs were beginning to be approved, okay? We saw at least ETFs were beginning to be talked about for Bitcoin becoming approved. This is when they actually were approved over here. We've been sitting above the 50 EMA and the Gaussian channel upper band the entire time. So losing that level would be a significant shift and a significant sign of weakness, which would likely suggest Bitcoin is going to go lower. Let's move over to the 3-day chart now, because we have to talk about the 50 EMA. Now, the 3-day chart, 50 EMA, is a level we have literally just broken below. You can see here on the 3-day, it closed about 20 minutes ago. This level is a level we are watching very closely. If we maintain below the 3-day 50 EMA, and most importantly, lose this uptrend we're going to be discussing in a second, that is going to be it, guys. That is confirmation. We are going to see continuations. Where would we likely see continuations to? We are going to be watching this level, the sell side liquidity level. We are watching for moves into 98 to 100,000 as a correction level. Until then, Bitcoin is at a point of support. So this, by all means, 110 is a point of support. We've also got this uptrend. This is a level of which we are watching closely. Now, when it comes to moving averages, we don't necessarily care too much if the price closes on and below. We care about the reaction of the price action at that level. So if we are able to maintain around here and then push back upwards, the 50 EMA would likely be hold. Remember, these aren't static points of support per se. They are more reflections of the average of the price over a period of time, and if the price has refound a level of equilibrium or a point of balance in the market, generally after large moves upwards, we see mean reversion back to these points. So we're not necessarily too concerned that we'll close below, although it is a bad sign because it means we could see continuations lower. It is more going to be, how does the price action react now? Is it going to recover from this 50 EMA point, or are we going to see continuations? That's really going to rest on this 110 point. So let's now talk about the short-term price action. The short-term price action has been bearish and it is still bearish. There's no doubt about that, guys. If we're just taking a preliminary look at, the risk factors here, you can see already, if I just delete everything off the chart, you can see we've got these lows here. We can see these lows developing around this 110 point. especially around 109,500. Again, if you just draw a horizontal ray from that low to the VRPV, you can see below 109,500, the VRPV significantly drops off. Of course, we had this mass liquidation wick occur. Generally, these wicks can fill. So if we do see the price action drop below here, it is likely we fill that wick toward the downside, retesting at least that 102 level. In terms of the bulls, for the bulls to recover, first and foremost, and by obvious statement, we would need to absolutely defend this point, and therefore we are at a point of support. It's very important to understand. This is a point of support. We are only expecting the next leg down if we drop below that level. But that doesn't necessarily mean the buyers are really in control. If we're looking for a full reversal, we want to be looking for positive momentum shift. So drawing our RSI trend in, we're watching the positive momentum shift. We're watching the trend breakout. These two levels we need to see breakouts of to expect continuations upwards. If we do not see a positive momentum shift and we do not see the price break upwards, we are not going to see much. Now, even if we see the price break upwards here, we still have the risk of this horizontal consolidation developing, which has the high at 115. And as we said in our prior video, this 115, 116K level is the level we need to break above to be confident that the buyers are back in control and will likely send the price back into the POC, back into 120, back into 122, suggesting a potential new all-time high is possible. So, to keep it simple, break above this point, 106, buyers are in control. Anything below, we are seeing the sellers are in control, and below 109.5, expect corrections to develop again. Very, very volatile corrections to develop. That is it for today's analysis, guys. Thank you for tuning in. I hope you have a fantastic rest of your day. We'll catch you guys in the next one tomorrow. See you then. Bye.